Hello one and all, thanks for tuning in to Kalkine TV. I'm Sage and this is the Hot Performers, a show where we take a look at stocks and sectors that could be heating up. And today we have ASX-listed company ANZ Group under the spotlight. And ANZ Bank was trading 4% lower at $26.02 in the morning trade after unveiling weaker margins in its quarterly update. We will look at why ANZ's net interest margin fell in the first quarter in today's show. So let's get started. The Australia and New Zealand Banking Group very recently announced a fall in its net interest margin during the quarter that ended 31st December 2021. The bank reported an 8 basis points decline in its net interest margin during the period under review. The bank attributed the decline in margin majorly to a lower exit rate at the full year and a continuation of the structural headwinds impacting the sector. And on that note, let's have a quick look at why Australia and New Zealand Banking Group's margin has plummeted and what are its views about the occurrence. ANZ Banking Group suffered group net interest margin deterioration of 8 basis points over the first quarter, or 5 basis points on an underlying basis. The bank attributed the decline to a lower exit rate at the full year and a continuation of the structural headwinds impacting the sector. The lender expected its first half performance to take a hit owing to harsh trading conditions in the month of October. In its latest market update, ANZ said that the revenue within its markets business for the month of October was softer given trading conditions, while subsequent months have performed more in line with the revenue trends of financial year 21. It stated that the softer start in October will likely impact first half performance. However, it also added that the bank expects the current headwinds to moderate in the second quarter due to a potential increase in interest rates, predominantly in New Zealand, and recent deposit pricing changes. The bank said that it was upgrading the size of its previously announced $1.5 billion Australian dollar on-market buyback with a common equity Tier 1 ratio of 11.65%. It noted that the credit quality environment has remained benign with a total provision release of $44 million during the quarter, and this comprises a collective provision release of $122 million and an individually assessed provision of $78 million. The bank was also of the view that nearly $140 million Australian dollars of negative transitional impact is expected to negatively impact operating income, spread over both the first and second halves of financial year 2022 on account of changes made to customer banking packages in its Australian retail and commercial segments. ANZ mortgage application processing for basic home loans is now in line with other banks after improvements to the bank's systems. First half revenue from the market side of the business will be dented by a softer start to the quarter during October, given trading conditions. Costs are broadly flat. Well, before we wrap up the show, let's look at ANZ's share price performance. The stock has delivered a negative year-to-date return of over 3%. In the past year, the share price witnessed a significant drop. Today, it opened at $26.41 today and is trading around the similar price currently. And thanks for your company on that report. That's all for now. We will be back again with the exclusive Hot Performers stock tomorrow. Until then, keep watching Kalkine TV for the latest market updates and related insights. Sage here, signing off.